So good afternoon and welcome to our July edition of our quarterly webinar. As is our normal practice, we will be looking today to highlight some of the continuing issues that face the sector, but also see if we can point to some of the opportunities that certainly continue to be on the horizon. So on the backdrop of interest rates having risen again since our last webinar and inflation still not slowing down, I'm going to pass to Sophie to kick off our session this afternoon with our normal overview of the High Street Sales Tracker. Sophie, over to you.
Thanks, Laura, and good afternoon, everyone. Can I have the next slide, first slide of the graph, please? Just as a reminder what the High Street Sales Tracker is, it's a like-for-like benchmark of retail sales for discretionary spend across lifestyle, fashion and homeware, and it looks at it on a weekly and monthly basis, also across stores and online, and their total tracker. Sorry, next slide. Great, thank you. I think, what Laura just mentioned about the continuing challenges is quite evident from these graphs. And in June, again, we saw a total like-for-like of, yes, it was positive at 1.9%, but it continues to be significantly below inflation. And now we've had 12 months of like-for-like sales below inflation, which means that the volumes being sold within the discretionary spend sectors have been continuously falling. Online, compared to pre-pandemic, we were seeing online of anything between 15 and 30%. You can see the blue graph there as to it's actually even below store sales, which just shows that the consumer is just not spending. And also shows some of the challenges that we hear about in the media of the pure online retailers, and their focus really being now on how they can focus on that cost base, but not just in terms of the initial sell, but actually the returns as well. We've seen a surge in retail insolvencies. These have been at the smaller end, but yet this is really, really concerning, given the significance of the retail sector to the overall UK economy as a major employer. And there is, if you read our most recent High Street Sales Tracker release and our press release, was a call for the government to take some action, whether that's to do with reintroducing overseas tourists being able to claim the sales tax, so that at least we can put ourselves on a level playing field with other geographical markets. It's also clear that there's a lot of competition for this consumer purse, and when we look at the consumer purse, this continuing challenge of inflation and interest rates, and what the term now that is being used, that inflation is just sticky, it's not going away, means that the power of the consumer is continuously eroding. So the challenge for discretionary spend is that, if you stand back and you look at the sort of priority list of the consumer, first, that shrinking purse is going on essential spend, but we're also continue to see that the competition for both leisure and hospitality and services, or some slowdown in those areas as well, but they're taking priority over the discretionary spend. Next graph, please. When we look at it by category, fashion has been performing better than homeware and lifestyle. Two factors really. Fashion, one, it was on weaker benchmarks, but also perhaps that's also more aligned to the fact that we're seeing a greater priority on travel and hospitality, and therefore people updating their wardrobes, but also homewares where people are holding back from those bigger ticket items. So what is this all saying to us? We do hear of a mixed report in terms of retailer performances. There were reports out today. So you've got at the luxury end, it seems to be more resilient. Reports today of Watches of Switzerland doing very well. And at the lower end, where value is really, really key, and Superdrug has reported profits surging from their own brand, but also people returning to city centres. It's those in the middle that, you know, as we've seen before, when there's challenges on consumer spend, those in the middle that are being really challenged and trying to differentiate themselves. So I think we're going to see this gap continuing to widen across the retailers, the strong retailers that there are opportunities for them, as Laura was saying, in terms of grabbing some of that market share. Superdrug was saying today that part of their opportunity has, for example, been their fragrance sections with department stores closing. So there are opportunities with less players, but it's about building on those opportunities. And I think the gap will just widen between the stronger players and the poorer players. I'm going to pass over back to Laura.
Thanks, Sophie. So interestingly, Sophie has taken us through the UK landscape, and I'm really pleased, as I mentioned at the start of this call, to be joined this afternoon by Natalie, who leads our retail and consumer sector for the US for BDO. One of the things that we find in our conversations, and I'm sure for the audience today, you know, the US market is a significant market for a number of UK retail and consumer businesses. So hopefully what we can do over our session between the two of us today, Natalie, is give a little bit of an insight, perhaps how that US-UK market landscape is both similar but also different. So welcome, Natalie.
Thank you very much. Thank you, very excited to be here.
Amazing, thank you for joining us. And taking on some of the themes from Sophie's section that she's just been through. Just as a general outlook, you know, what does the US retail landscape look like right now?
So it's if I was to explain it in one word, it's probably complicated. You know, I think we are in an interesting position right now in the US. You know, the inflation is starting to slow down. Actually, as of June, we've seen inflation really take a little bit of a dip at around 3%. So finally, it seems as if wages are finally getting caught up to inflation. And the outlook is, as always, you know, retailers always want to look at the glass half full. The outlook for the back half of 2023 is cautiously optimistic. As you know, that the back half is really a critical year for many retailers. We soon will have back to school, followed by the holiday season. So this is really a critical part of the year for most retailers, in fact. And funny enough, we're just coming off the heels of Prime Day for Amazon, which of course is always greeted with Walmart specials, Target specials, as well as other retailers trying to jump on the Prime Day bandwagon. So, you know, it seems as if that has had some strength, but I think it's too early to tell since we just closed it out yesterday.
Yeah, that's really interesting. I was just actually looking, and the headlines from some of the data stats says the US, you guys are always a lot quicker than we are to get these things out, says that it's about 6% up last year at 6.4 billion across all of those platforms, which is incredible growth. I guess one of the challenges that Sophie's been raising as we've been tracking through the high speed sales tracker this year is, does revenue reflect volumes? And are we seeing a decline in volumes? And I'm not sure whether we'll get those stats coming out Prime Day or not. But yeah, interesting to see that the consumer in the US in particular is still racing for a bargain. And it'd be great to compare whether we saw the same in the UK.
Yeah, the consumer's always looking for that bargain. And we've started that trend. And I don't think it's just the US, I think it's a worldwide trend. This trend started probably over a decade ago, where consumers are really looking for a good deal, good value, not just a good deal, but a good value. We had the introduction many years ago of coupons, promotions, and consumers are now educated, especially in the US. We're very coupon happy, very promotion happy here. So no consumer makes a purchase without making sure that that they're getting the right price, the best price. And you know what? Then when we say consumer, we really need to look at who that consumer is, because the demographic of the consumer really is affected by, or the way the consumer shops is affected by the demographic, whether it's a younger consumer who is really more, has different things that they look at when they're looking to make a purchase, whether it's quality, price, uniqueness of the product, whether ESG, and I know we'll speak about ESG, whether ESG has a big play in where and how they make their purchase. Whereas looking at a more mature consumer who may be more in tune with, certainly, of course, price is a factor, but perhaps also looking at the convenience factor and customer service. Are they getting the full package, so to say, the full customer experience, what's deemed to be the customer experience for them when they make that shopping experience?
And I know one of the things that you and I have debated over recent months is there has been a real shift in the UK, where we were already drifting to an online shopper ahead of COVID. Interestingly, COVID's probably flipped that back slightly. And as Sophie just mentioned in her stats, a return to store is something that we are seeing, but experience is a critical part of that. And we do not have that same consumer shopping experience in the very large malls. We have a few of them, but we don't have that. Sort of any thoughts from you from a US consumer as to, is it retail that they focus on? Is it online? How should people think about the US consumer and the way they like to shop?
So I think in general, we'll make a generality. As you mentioned, as a result of COVID, e-commerce has really taken off. Usually, prior to COVID, pre-COVID, e-commerce represented anywhere between 10 to 12% of the overall retail market. During COVID, that spiked up to 18 to 20%. So obviously, we had significant store closures, unlike you, for quite some time, and the consumers had to pivot to the e-commerce platform. And you know what? It actually did created a big boost for e-commerce, because consumers were forced to go there, but ultimately got comfortable with a whole new channel of shopping. So e-commerce has certainly dropped somewhat from the high levels of COVID. So now we're looking at anywhere between 15 and 16% versus the 18 that we saw during COVID. But we're clearly seeing a return to the malls. We had a little bit of a downturn in Q1 as a result of the inflation, as a result of the rising interest rates. But given that, at least in the US, the inflation is looking to somewhat stable, interest rates have not gone up in the last month or so. So we are seeing an increase in foot traffic, perhaps except for the last day or two with the Prime sales.
Amazing. I mean, it'll be interesting for us. We should take it away to just see whether we've got that similar data point on just the percentage of people that are online versus store. But that is something this year in particular we've seen move, and a number of retail and consumer businesses are really thinking quite hard about how they have a multi-channel offering to the consumer here in the UK to make sure that they're capturing that attention. And being really alert to that, I think, is going to be the key. Agility is a word we use a lot in these sessions, and for our businesses here, people have to adapt and change, and I'm sure that will not be a theme that we lose sight of.
Absolutely. Having a strong omni-channel concept is critical. I think the consumer is more educated than ever before. They do their research before they go out to the store, before they go out to make that purchase, to make sure that they're getting the best deal, they're getting their bargain. As I mentioned earlier, they come prepared with their promotions or their coupons or whatever they have in their arsenal of goodies. And they will look online. They will look to see what prices in the store, what's available. And having a really strong omni-channel, having a really great logistical way of managing your inventory, retailers managing their inventory. It's not just what's on the floor that matters. It's when does it get to the floor, the layout of the floor. So having the right timing of the supply chain coming in is critical. So I think that omni-channel is really important, but retailers today, especially in the US, and I think it's probably global, in order to be successful, have to have a really strong digital platform from beginning to end. And I'm not sure, maybe we'll get into the data analytics, but retailers that are successful today truly understand their customer, and that's through AI, through data analytics. Really, as we continue to shop, whether it's online or register for emails and cookies and everything and all of that type of stuff, retailers know a significant amount of information about us, and good retailers and smart retailers will tailor what they send, emails that they send us, texts, or whatever other form of communication. Even on social commerce, the way they approach us on social commerce is also targeted based on the information that they're getting us. And all of that really needs to be wrapped up between social commerce, e-commerce, the customer experience in the store. Really all has to be a strong connection in order for the retailer to be successful.
And just picking up that piece around social, we here in the UK, and I'm sure you will in the US, have seen the rise of TikTok becoming such a significant channel for people to engage with the consumer. Are you seeing people still work across Google, Facebook, Instagram, and this TikTok piece that's new? I know in the UK here, people are really, really struggling to utilize that platform in a way that they'd ideally like to. They know it's the future, but the knowledge of that platform is not as vast as perhaps others. What are you seeing just around that social influencer-led strategy, and how important is it over in the US?
Social commerce is still very strong here, and making purchases, whether it's through Instagram or through Facebook, having that platform to actually buy directly through Instagram is very powerful. Influencers are now not just young people that are, it really is influencers through in very different age brackets. I think the retailers have become quite sophisticated with that, and influencers are really there to target a particular age group, a particular demographic. And influencers are, whether it's on TikTok or Instagram or Facebook, they are being used as the new salesperson, because consumers can relate to the influencer. Again, whether it's based on their age, or it's based on a particular concern that a consumer may have. And I think that is really powerful because it's continuous. It's like in a loop. And once you get one, you'll get three, you'll get five, and it's very powerful. And retailers are utilizing Instagram. It's a whole nother form of advertising. Back in the day, we would have commercials on television, or there would be magazine ads, and those have really decreased significantly. Published media is also has decreased. So this is a new way of targeting customers. It's a new way of engaging. Actually, I think the key word here is not just targeting, but engaging with the consumer.
Yeah, no, completely agree. And you mentioned a few of the things you and I have touched on in our conversation over recent months around ESG, digital. AI continues to be top of everyone's agenda here as to how important is that going to be from a technology platform into retail. I was with a client the other day who is looking at avatar models for an apparel brand, which feels to me a little bit away from consumer generated content that definitely has been the focus for the last few years. That now, even if that avatar may look very real, whether that's what the consumer is thinking, I'm not so sure. But in terms of what is top of mind for retailers in the US, what are the big things people are having to think about over there?
So retailers, there's really nothing. I guess the certain things just stay the same. Retailers are looking to understand and get comfortable with who their customer base and create an atmosphere or create a desire or create a customer experience for that customer. And whether that is going to be through an online channel, whether that's going to be an in-store experience, whether that's going to be an AI experience. We've seen lots of retailers, whether it's Sephora, where you can try on cosmetics, lipstick, eyeliner, you can try that all online as part of the app. So for those consumers that prefer to shop online or in the app, the retailers are addressing that and are looking to win those consumers by creating these AI experiences or these customer experiences for them online. There's also for those consumers that are concerned with whether sustainability. Obviously, we certainly see an uptick in sustainability and sourcing. We see a lot of that in the news. Consumers are concerned about that. And retailers need to be aware that their decisions or lack of making the right decision has consequences. And those consequences can turn to the consumer making a different choice. So it's a lot more complex. And I think I started with retail is complicated in the US today, or maybe globally. It's not just selling the product. It's really creating a holistic experience, and whether that is from an omnichannel perspective, whether that's from an ESG perspective or an AI perspective, it all comes back down to something that we've all known for years. And, it's really going back to basics. It's understanding who is your customer base, how do you sell into that customer base, and what's important to them. And retailers that are able to understand that. And then, of course, obviously that follows through with other actions between supply chain and making sure you have the right supply chain partners and all of that. But retailers that truly understand their customer base and what's important to them are the ones that are going to be successful going forward.
Amazing. And I think one of the things that for the UK retailers, UK brands that are looking to the US, perhaps we don't take the time to truly understand the difference to that consumer, and maybe that is one of our biggest challenges, is that they are different. We people think differently on both sides of the globe. So some really interesting thoughts, and I'm sure, Natalie, we could carry on for a lot longer, but I'm delighted that you're going to join me for the Q&A session at the end of our session today. So if people do have questions in the audience, do please post them in the chat. But thank you for your time in this session, Natalie. I'm sure we will be asking you to come again, because it's been great to see just how similar some of these market challenges and opportunities are, but also perhaps a few takeaway thoughts on how people can think differently. So with that, I'm going to pass to Neil, and Natalie and I will see you for the Q&A session shortly.
Thank you.
Lovely. Thank you very much, both. Some really good insight there. So I am going to change tack slightly, and we're going to have a little conversation about national living wage, a very topical issue at the moment. I'm delighted to welcome one of our BDO experts, Siobhan Waters. So welcome, Siobhan. Thank you for joining us today.
Thank you for having me along.
Absolute pleasure. So I suppose to kick off, maybe if you could just give us a little bit of your background and your story, and some of the stuff that you've come across in that experience.
Yeah, so I have recently joined BDO. I joined in February this year, and I came directly from HMRC. I was in HMRC for 14 years, but 6 of those years were within the National Minimum Wage Enforcement Team. And in those 6 years, I had some varied roles within that as well, managing the enforcement compliance officers, dealing with the not so nice side of it with the serious non-compliance teams, and more recently looking at the targeted enforcement work. So I led on the specific projects which HMRC have in a more proactive approach, looking at different sectors that have more risk of breaching the national minimum wage legislation. And since I've joined BDO, I've been able to put that experience to some good use, helping some clients, being proactive to get themselves correct with national minimum wage compliance, but also to help some of those that have been in inquiries and making sure that we can progress those inquiries along for them and help support where support's needed.
Beautiful. Well, we're certainly delighted that you saw the light, and we've now got the benefit of your experience on this side of the fence. So thank you for that. And I sort of said in the opening, national minimum wage is obviously topical. So a couple of weeks ago, I'm sure most people on this call will have seen it. The Revenue published a rather long list of names. And a good proportion of those names that were on the published list of failures were in the retail and consumer sector. So I guess my question to that is, did that list come as a surprise to you, either in terms of number of names on it or the timing of it?
Yeah, so the last naming list prior to this one was in December 2021. So it has been some time since we've actually seen that published list come through. I think the named people on this list had inquiries in 2017 to 2019. So it probably did come as more of a surprise to them. It does reinforce, though, that HMRC, with their national minimum wage enforcement, are continuing to use all the tools in their armoury, naming being one of them. The other thing within that naming list obviously details the number of workers, the underpayments and the penalties. So there was £7 million of penalties charged for that period for those 200 that were on the list as well. So that's quite a significant financial impact, as well as the reputational impact, I think, for those that are on the naming list. So I do think as well it did highlight, a lot of the complexities of the legislation. The companies that were named have come out themselves and said that this wasn't due to them not paying the rates, it was the technical failings, and just not applying the legislation in the correct way and having the correct understanding of it, rather than being actively paying less than the published rates. So I wouldn't be surprised to see more regular naming coming through. We certainly know that HMRC have been quite active in the year since 2019, but certainly now as well.
Yeah, I mean, it continues to be and definitely is a main focus area for the revenue. And I guess there's a number of people in the audience that, and certainly when I talk to my clients about this, they say, well, I shouldn't have a national minimum wage issue because I pay the real living wage, and surely I'm protected in that situation. Is that the case? I mean, clearly there were some big well-known names on this list.
Yeah, so I hear this quite a lot. I'm an accredited real living wage employer. National minimum wage is not a rate that we pay above. And that's great to hear, it really is, but it does not give protection from being subject to a potential HMRC inquiry. And that's because there's multiple ways that those inquiries can come about. So worker complaints are one of them, and HMRC take every worker complaint seriously, and they do look to open up as many inquiries as a result of those complaints. As I mentioned, I was involved with the sector-based targeting, so that is really having an understanding of, you know, the parts of the sector which would lend themselves being more to being at risk of having underpayments due to various other things other than rates of pay. And what we've seen in recent times is they're taking a geographical approach. So they're looking at areas where there is higher workforce but lower wage, bringing in a lot of data to target those geographical areas and all sectors within that as well. So the message that I always try and deliver when talking about national minimum wage compliance overall is that the rate of pay is not the only consideration, and quite often paying above the rates is just not enough to ensure that you would be compliant with the regulations that are there. The key thing on that is that pay for national minimum wage purposes is different to gross pay. And when people do have these misunderstandings around the complexity, it can often be the fact that they've looked at the rate of pay, they've looked at the total amount that's been paid in a particular month or pay reference period, and they felt that that has been above any applicable rate. It does have a slightly different impact when you start to see people who are on salaries of £50,000, which, you know, someone on a salary of £50,000, their hourly rate would be nowhere near, you know, the living wage, and it would certainly be above the real living wage as well. However, I have seen that, and it's been someone who's voluntarily entered into additional salary sacrifice for their pension contributions. They've worked additional hours, and effectively when you do the correct calculation, it does bring them down into a rate that was less than what they were entitled to. So I don't think the accreditation or paying a wage or a rate that's above a certain figure does give that protection. There are so many different factors that come into doing the overall calculation that it can sometimes be a bit of a safety net that you shouldn't feel too comfortable in with the rates that you are paying.
Yeah, and just building on that a little bit, Siobhan, so you mentioned salary sacrifice that is a common pitfall in these areas. What are some of the other things that retailers should watch out for that are generally picked up by the revenue?
Yeah, so the revenue will look at anything that makes up pay and anything that doesn't count for pay. So there's certain pay elements, for example, premium rates and overtime, that will not be included in the calculation if you are a particular worker type. So there's 4 worker types that national minimum wage look at. And if you get the worker type incorrect from the offset, the certain elements that you can add in can then start to give you a false calculation. Certain things like additional hours at the start of a shift or a handover during a shift, having to be at the particular workstation at a certain time, 10 minutes before, which is quite common. People do tend to be asked to be there a wee bit earlier, but their shift time not starting until, say, shop opening time at 9 o'clock. That 10 minutes every day would, very, very quickly add up to being unpaid working time in the eyes of HMRC, and other things that just do not come into factor with regards to record keeping, timekeeping, training, uniforms, deductions from wages. The list could be quite long.
Goes on.
Yeah.
And again, you in your sort of opening bit, you mentioned about penalties. So if you're in the unfortunate situation where HMRC have come out, they've investigated, and they found a technical error, is there any leniency on the penalties? I think you quoted something like, was it £7 million on the named list?
So the only leniency in the penalty is if you pay all the workers that were named on a notice within 14 days, you get a 50% reduction. So still an effective 100% of the underpayment that you are charged as a penalty. 14 days is the maximum time on that, but it also would include the fact that HMRC go back 6 years. And they can include current and ex-workers on those notices. So 14 days doesn't really give a lot of scope for people to try and look back to ex-workers and people that might have been part of a migrant workforce who are now no longer living back in the UK. So it can cause some difficulties at that stage to be able to meet that 14-day deadline as well. So some clients that I have spoken to have unfortunately not had, the correct advice on that 14 days as well, and it's caught them out too. So it can cause more financial difficulties than would be necessary with that penalty.
Yeah, really helpful. Thank you. When I talk around these matters with my clients, a common response that comes back is, yeah, I've got good procedures around national minimum wage. I monitor it on a regular basis, and I've got payroll software that allows me to, once I've identified a problem, put a top up in. In your experience, is that generally sufficient to help you navigate through these compliance challenges?
It's certainly one element that's helpful. But I think it would be fair to say that the reliance on payroll software alone is not sufficient enough. I won't do it, but if I was to do a quick poll on here and ask, those that are in the audience, who's responsible for national minimum wage monitoring in your business, there would be very varied answers. I hear that it's payroll, that it's HR, that it's the finance team, the reward team. And payroll does have a huge element to play a part in the actual pay that's being paid out. It does sit across many different areas, and reliance on payroll software has been one of the things that a few of the people that were recently named have come out and said it was, technical problems with the payroll that's caused these underpayments. There are also certain parts of the legislation that wouldn't be picked up by payroll as a flag for causing a breach of NMW compliance. An example there, so you've got, a dress code element. So an employer specifying that someone has to wear black shoes, black trousers, which is very, very common. The imposition from the employer to have that is a cost in connection with employment. And therefore HMRC would say that purchase of those items in that particular pay reference period could effectively bring someone below the rate that they're entitled to. We also see things around payroll not necessarily picking up enough of what HMRC consider to be robust record keeping, and that tends to be around salaried workers and the hours that they work over the 12-month period that their salary is for. So there is a big reliance on payroll, but there has to be strong process, procedures and ongoing monitoring in the background as well to ensure that it's not purely payroll, and that anything that changes throughout someone's particular year contracts, someone going part-time and having a salary sacrifice, some of these things can sometimes cause payroll to give false readings as well. So yeah, it's sometimes unfortunate that payroll software is not sophisticated enough to pick these things up, but if there's also ongoing checks as well, that should give a bit more reassurance.
So a good start, but clearly you've got to have the right systems and processes around that. And I guess that leads on to a question about, okay, so you monitor it on a regular basis, you've got a healthy process environment where you're doing regular checks, and unfortunately you as a retailer come across an issue, and that manifests itself as an underpayment. In terms of the process then, do you go and make a voluntary disclosure to the revenue? Is that the end of it?
Yeah, so there is a voluntary disclosure process available for national minimum wage, but the caveat that I would explain to people on this is that it doesn't protect you from having a full inquiry opened up. I have seen in the past people who have made voluntary declarations and the calculation that they have conducted has been incorrect. So say, for example, they have paid back those workers that they had underpaid. However, they've not stipulated that that was due to national minimum wage arrears. If HMRC did open up an inquiry and look at that, they could determine that because it wasn't specified as being underpayments of national minimum wage pay, that doesn't count and therefore could be included in a notice and therefore have penalties, and potential naming could be a result of that as well. Doing a voluntary declaration doesn't have any impact on the penalties. I know some other taxes you would get different concessions around penalties for the voluntary declarations. HMRC do review every voluntary declaration that comes through, and it has in many cases, as I said, opened up full inquiry. So it doesn't give the protection as much on submitting that, and then, you know, that would mean that HMRC wouldn't come back and check. What they will do if they do find that you have made an incorrect or an error in your declaration, they can come out, they'll open that up. You might have looked at something in isolation for 1 year. They would then look back over the 6 years. If you've not applied the correct uplifted rate, so when someone gets a payment paid back in year, it has to be at the rate that the current year is set at. And it has caused some people in the past, you know, quite a lot of additional work after they've thought that they've done something to put things right. So my advice on that is, if you are doing a voluntary declaration to HMRC, that any advice that you've got, any calculations you've done, anything that you can do to ensure that that voluntary declaration is correct. And it also doesn't lead to a potential worker complaint. I've seen that as well. People finding out that other people have had money paid back and they think they are entitled to it, so they will contact HMRC. And, you know, a bit of a potential vexatious complaint, but, you know, it is something that HMRC would look into further as well.
Yeah, so I think through all of those comments, I think the theme we identify is it's an absolute minefield, isn't it? And yes. the consequences are really high if you don't follow the procedures. I guess I'll finish up by asking you a question that Laura normally asks us. So in terms of a key takeaway from this, what are the one or two things that you would leave the audience here?
I think it is just about considering that national minimum wage pay is different to gross pay. The rate of pay is something that is not the only consideration. Anything that has an impact on someone's time, an impact on their cost, and an impact on their wage, really needs to have robust processes and policies that are followed nationally. Branching into local practices can sometimes cause an issue as well. So it's just about having that overarching robustness, and also making sure that the workers understand, if you have to tell them, no, I'm sorry, we can't enter you into that salary sacrifice arrangement because it would bring you under national minimum wage, that they have a full understanding of these things as well, and that should help avoid any potential complaints being raised to HMRC.
Lovely. Thank you very much for that. Real good practical insight. Laura, over to you. Great.
Thanks both. It was really interesting. And a minefield, I think, is what I took away from that. So, but I'm also going to ask the rest of my colleagues to join me for just a Q&A session as we come to a close. As I mentioned, if there's anybody in the audience that has any questions for anyone that's been speaking today, please do just drop them over to me and I can pick them up. I guess one of the things I just wanted to start with, Tom, you haven't presented today. Normally you're here doing the consumer insights with us. But yeah, part of the questions I didn't ask Natalie when I was just in that session was, clearly in the US, they have such a drive around coupons, driving people into store. We see loyalty. Your thoughts, just listening to Natalie, and maybe where you see some of those similarities and differences in the loyalty schemes we have versus coupons. And we all know that the likes of Tesco's are seeking to change the value of the coupons in the UK, which is really interesting, isn't it, compared to the US?
Yeah, I think retailers have spent a lot of money trying to understand how they put promotions near a time, and couponing is a clear way that they can do that. The development of the mobile applications by the big grocers has enabled probably more push notifications, and you start to see those in store. So there's one which is visibility of, say, club card pricing as you enter store, and you can see that with their point of sale. But there's also actually now more push notifications of offers that consumers can get as they go into or are driving to their locations. So I think we, in some regards, are actually probably a bit behind some of the major US retailers on how they apply data to promotions. But actually, I think we are seeing the way that the consumer shops and the kind of historic usage of cards like Tesco Club Card or kind of Sainsbury's Nectar card, that there is appetite for consumers to really engage in that channel. And it's a really clever commercial way that I think retailers can drive consumer behavior.
And Natalie, loyalty for you, is it, do you still have those similar loyalty schemes? Are those important for brands to think about as they come into the US? Do you need to put that into kind of the margin calculation?
That's a great question and a great point, Laura. I think loyalty points have really, really driven, no pun intended here, but a lot of loyalty from consumers, especially with the younger generation, the younger demographic, because, loyalty is important. And then as they continue to get these loyalty points, it turns into savings. And I've spoken to and we've interviewed people in their 20s and 20 to 30, they will actually walk a bit further, drive a bit further, just to go to the retailer where they already have a loyalty scheme with, a loyalty program, so they can get their loyalty points. There's actually a move in the US right now, and this is fairly new. This just came out within the last couple of days, of doing away with loyalty points for consumers. The government is looking to take some of that away. So it's a big story right now in the US, but loyalty points is certainly something of, I think it goes beyond the whole idea of promotions and coupons, because that is truly making a connection with the consumer. And as you continue to make that connection, you can then understand and make various offerings or additional promotions to continue to entice the consumer and to create that customer experience for them.
And Sophie, just picking up on some of your points, this whole volume to revenue play, your thoughts on what our Prime Day may have looked like, but do you think coupons could work here in the UK, driving people to get that discount? I know we talk about discounting a lot as a group.
I think it's a real challenge at the moment. I think, in terms of the UK, the retailers are challenged in terms of their cost base and the extent that coupons will actually eat further into their margin. They really need to sort of balance that up when they're offering them. I also think that, loyalty, coupons, the same way that inflation is sticking, or quite the reverse way that inflation is sticking, we've got a consumer that's not sticking. They're really after value. So I guess if you're going to offer a coupon, which is going to give them bigger value, and they need that essential spend, they may well spend it and use it. Whereas, if we're looking at the sectors in the UK that are more resilient, the luxury sectors, it's not going to really have a play there. It's luxury and all about value at the moment, and at the same time, the retailers really focusing on their overall model and their cost base. So it's a really tricky question. Will it work in the UK? I don't think it'll work the same way it works in the US, but it depends what else comes with it, really.
And just picking up on those differences in the consumer and also maybe some of the challenges. Again, posing this to you, I suppose, first, Natalie, how relevant is which you talked about H2 driving your market, and in the UK, we'd absolutely agree that, we still have a strong level of seasonality, and our next webinar will be our predictions for the golden quarter. But, those two seasons, spring, summer, autumn, winter, are they something of the past, or are they still really relevant? We've started to see a lot more retailers having to do more frequent drops in apparel, but what are the thoughts from you from the US?
So I think retailers are doing, from an apparel perspective, a lot more real time as much as they can. We've seen a significant uptick in inventory. If we go back real quick, we had the pandemic, so everything got shut down. So there were significant changes or issues with supply chain, inventory shortages, not enough inventory. We don't need to go back and revisit the whole toilet paper and paper towel shortage of 2020. And a lot of retailers over-ordered and had these great, they didn't want to be caught in that situation again. And then we saw in 2021, and then certainly in the back half of 2022, where all of that inventory came in, and there was a lot of excess inventory in the back half of 2022. Two reasons. One is because of all of the ordering, all of the merchandise came in, and then we had inflation and rising interest rates. The consumer pulled back, but the inventory came in. So back half of 2022, very challenging, lots of inventory, and some of that excess inventory carried into the first quarter of 2023. So you did see a lot of promotions, a lot of discounting taking place. So now we're kind of starting to level out a little bit, and the retailers that are doing it right are ordering more in time, and they're reevaluating their supply chain to make sure that they are getting those products more in time. But as you said, we are going into back to school, which is next month. It's a huge market for the US. You know what? I've been reading statistics that say that it's going to be a lackluster back to school, but hopefully it will not be down from last year. And as I said, I think the consumer confidence is increasing a little bit. The small business confidence is increasing a little bit. So hopefully it'll be somewhat optimistic, but retailers are trying to buy more in season. And we're seeing that as a result of this whole roller coaster that we've had with inventory over the last 3 to 4 years.
Sophie, Tom, thoughts about whether seasonality will become something that is a distant past in the UK?
Seasonality as in the weather seasons or
event? Well, both are interesting, right? With the climate, Natalie, I'm sure you'll know that in Europe they're having an incredible heat wave, not so much here in the UK, but I think it's a fair point. Sophie, probably plays to the merging of the seasons, perhaps.
I mean, in terms of weather, I think, there is a bit more of a merging of the seasons. I mean, in terms of, seasonality as a result of the golden quarter and Christmas and other events during the year, I think that will continue to play. But I think you're right. I think, seasonality in terms of weather. I think consumer spending is more driven around events, and the sort of calendar of events that we have. We do see a pickup as well in that September when people have returned from holiday and back to school, etc. And then hopefully it sort of then picks up again leading into Christmas. But yeah, I think the seasonality in terms of weather, it's not as much as it has been historically when people go out and buy their boots and coats.
Yeah.
For the winter season.
Hope for our Indian summer. Tom, any other thoughts to add?
I think I'd only add that you'll see that merchandise packages will, I think, change more in terms of having all year round garments. Certainly, if we're just talking apparel, where I think that retailers still have to play to is, as Sophie mentioned, events and the time of year for key hero products. So if you're launching autumn winter, there's going to be a jacket, there's going to be a heavier knit range, and those are important for marketing and comms. But the in-store experience, I think, is going to become more consistent all year round because of that ability for retailers to not hold so much inventory and cater to different weather patterns and styles. But I think they'll always need events and hero products to sell product.
Amazing. And unfortunately, we're running out of time today. And as Neil alluded to, I always close these sessions, Natalie, with sort of a takeaway 3-word thought from people as they go away from here. Sort of takeaways from you, just a 3-word pointer.
I'm going to stick with cautiously optimistic for the second back half of the year. So cautiously optimistic.
Awesome. Neil?
3 words would be national minimum wage is an absolute minefield. I think that's probably 4. The only other thing I would add, I mean, we've touched and had some really good insight from Natalie on the US. When UK-based resellers are expanding into the US, again, that is another minefield. We could probably do a whole webinar on that. But go into that market with your eyes wide open, because the tax system is very different from it is over here.
Sophie?
I'd say managing costs is going to be priority, but at the same time remain focused on product and service, because we will come out of it and consumers remember.
Siobhan, any thoughts from you? Neil's already put you on the spot, but we'll repeat it.
Yeah, just what I said earlier. Not just rate of pay. So it is a minefield.
And Tom, to conclude.
Well, we need something really positive. So I'm just going to go and say that it's going to be a cracking quarter. Like end of the year, it's going to buckle trends, and no one will know that it's going to come out of nowhere. Don't hold me to that. I know this is recorded, so can we just delete that a little bit? I just wanted to end it on a high.
Amazing. Well, thank you for everyone who's joined us today. Thank you to my colleagues, and we look forward to seeing you again on the 21st of September ahead of that golden quarter, and hopefully Tom's confidence will remain with us. So thank you all. Natalie, have a great day. You're at the start of yours. Everybody else have a great afternoon. See you soon.